Welcome to the Legal CFO.
Hello and welcome to the show where clarity meets profitability. This is the Legal CFO with Ryan Kimler, the founder of Net Profit CFO. If you're a law firm owner looking to get a handle on your finances, grow your bottom line, and finally take control of your numbers, you're in the right place, because each episode, Ryan's going to break down the business side of law with straightforward strategies to help your firm run smarter, earn more, and scale with confidence. I am your host, Kevin Rosenquist, and today we're going to talk about future-proofing your firm, the financial planning for lawyers. Ryan, welcome back. Great to see you.
Yes, absolutely. Glad to be here and really excited for today.
Yeah, me too. I really enjoyed our kind of intro to how you help law firms. Now we're going to get a little more into the nitty gritty. So why do you think it is that financial planning is so often overlooked in law firms?
Yeah, that's a good question. I think, a lot of business owners, it's just natural, and it's the kind of the environment that we're all in. Sales, just more sales, more sales, more sales. 10x. I'm not going to name the person, but 10x sales cures all, right? You've probably heard that on Shark Tank. And I think planning beyond that is not sexy, right?
Mm-hmm.
But I think if you were to walk up and talk to 25 lawyers and you ask them, hey, what's your goal for this year? They're probably going to jump to X number of cases or X number of dollars in revenue, right?
Right.
Probably what they jump to. And I think, in the business setting, that's kind of the vanity metric, if you will. And, everything beyond that is more private, right? As far as what's your profit goal? Nobody asks that, right? What's your cash flow goal, right?
Mm-hmm.
What's your owner take-home pay goal? I think when you start asking those kind of questions, then it feels like, well, you're asking me to share like my personal finances. And I feel like that's just kind of in our environment, almost like rude to do a little bit. So that's why I think it gets missed, unfortunately.
We kind of referenced this in our last episode, and I brought up the startup founders and how they're typically not like suited for it. Do you find that with lawyers too? Are they just not? Is it just not how their minds work?
Yeah, to a certain extent, yes. Math and numbers, and I would also say too, to be fair to lawyers, the accounting reports and actually going through and planning everything and how cash flow works was not built for business and was not built for it was not built by an entrepreneur and how do I improve business. Instead, it was built for compliance and how can we make sure that you're filing your taxes right with these reports. And so right from the start, you kind of are starting with that disadvantage.
What kind of differences, as far as how you approach a client, are there between like a law firm that's more of a business and maybe a solo lawyer just kind of working on his own?
So obviously, when you've got a small business that's got a team, we've got to factor in payroll, right, and what's being paid. Versus if you're a solo, you probably are just worried about paying yourself, right? And how do I grow this firm, right? And so what we're focused on there is really, really different. One, on the solo side, we're really looking to grow, and my biggest focus is, how can we replace you, right? Especially if you're a lawyer and right now you're doing all of the lawyer work, right? That's not going to be sustainable long-term, especially if you're looking to grow a team. And, the clients that I'm working with, they're absolutely looking to grow their business, grow a team. And so you continuing to do all the legal work is not going to be sustainable. So those are the things that we've got to work on. And then on the other side of the coin, if you already have a team, we've got to plan further, looking at expenses, looking at what are we paying our people? Looking at, do we need to make an additional hire this year? What is that going to cost us? And running that all the way down to what are our profits going to be? What's our cash flow going to be? Are we going to have enough money in the bank? Because you're really responsible for those people, right? You're really responsible for their jobs, which probably provides for their families. I look at what I do and working with multiple companies at the same time, I can really have a big impact. Lots of jobs, several businesses. It gets widespread pretty quick.
Yeah. And kind of on that note, let's go out even farther. Like how can law firm owners think ahead about retirement for themselves, for their teams? You talked about taking care of their families. What about the bigger picture, the longer picture?
Yeah. And how are you going to exit? Right. Those are all those are all important things too, right?
Right.
And to your point, I think on the retirement side, I think a lot of the planning is, well, I'm going to sell this firm and I'm going to have a big exit and that's going to fund my retirement. Right.
And risky plan.
Yes, very, very risky. In fact, I think retirement on the financial side of things, if you ask me like on the financial department or accounting department, like what gets missed the most, I would say it's having a CFO that looks forward with you and strategically, and having someone that helps you plan your retirement, right? And
Mhm.
I don't say retirement planners because that makes it sound like CFPs and people that like sell life insurance. I want someone that's going to advise you as a business owner what are the best things that you can do to plan for your retirement using a whole wide variety of tools, not just one.
What kind of tips do you give? Can you give a couple of tips that you'll give to a law firm about how they can plan for those kind of things, especially if
Yep,
they're newer?
sure. So it all starts with having a business that has strong operations, strong profits, strong cash flow. Obviously, if you have more income coming in, that's going to make the value of the firm greater and also help you put more money in your pocket as the owner. Second thing that I love to look at that I think is really, really underrated is actually buying a commercial space and buying a building. So I was actually just in a meeting this morning talking with a law firm owner about buying a building, right? You're probably going to rent somewhere if you have a law office anyway. Getting invested in a commercial space, you have the opportunity to make rental income from other tenants that are in the building.
Hmm.
You also have the opportunity for depreciation, which is a huge tax offset if it's done the right way. And when you go to sell your firm, that ups, if you own a building, it gives you options. You can either continue to rent it to the firm, which gives you cash flow on an ongoing basis, or you could sell it with the business, which obviously increases the value of the firm as well. And in that sale, if your buyer is going to go get financing, like with the SBA, for example, the loan term is actually longer when there's real estate involved and there's an asset backing that business than if there is no asset. So if you're renting an office space and you want to sell that law firm and the buyer is using the SBA, I believe the length of the loan max is like 10 years. If you get real estate involved, that length of the loan extends to, I think, 14 to 25 years. So much longer payback period. So that's one of the best tips that I give for law firms that are, renting a floor or renting a space. Really, really interesting to look at, and it's provides opportunities for retirement too.
What are some of the strategies that can help law firms build long-term stability, especially in uncertain markets like, today?
So big key things. We talked about this a little bit on the first episode, but being priced right is a big thing. And then making sure you're keeping a good handle on your big expense buckets and where they are. I like to look at payroll and I separate everything out. What does it really take to pay and support our people? So that doesn't just include wages. That also includes taxes, 401k, healthcare, benefits. If you've got like a simple IRA or anything like that, anything that, the firm is putting money to that relates to paying our people, workers' comp insurance.
Happy hours.
Yep. I put all those things in one bucket, right?
Yeah.
And the big thing that I look at, the big metric, the big goal is that payroll expense should be anywhere between 40 and 45% of revenue, no more. So,
Mhm.
and that number sometimes can be hard to get to. And
Yeah.
that should include the owner on a salary,
Wow.
on a decent salary. Not like I have a $2 million business, let me pay myself $750,000. Okay. We've got to have a reasonable salary in there that's, probably six figures, but not crazy six figures.
Right, right.
Not like baller lifestyle, let me go buy a Lamborghini,
Yeah,
right?
yeah.
So 40 to 45% there, invested in payroll and your people. And maybe that fluctuates a little bit as you hire some new people, especially like new attorneys. Sometimes they take some time to ramp up, right? So that might fluctuate a little bit, but our end goal is to get that number back to 40 to 45%.
Okay.
Then from there, we look at marketing, roughly 10 to 15% of revenue invested here. Could be less depending on the size of the firm. And then the last bucket's really overhead and what you're investing in: rent, insurance, softwares, computers. And that needs to be somewhere in 20 to 25% are really kind of my goal percentages. When you add those things up, you're really making your business efficient and you're setting yourselves up for strong profits. That's going to give you a profit margin of 20 to 25%. So that means every dollar that comes in the door, you're keeping 20 to 25 cents. I
And you've
always
already taken your own salary out of those figures too. So
correct.
that's great.
Correct. Now you
Yeah.
are going to pay taxes on that number,
Sure.
right? So if you got $1 million business and you net 200K, You do have to pay taxes out of that 200K, which is going to be like a distribution to the owner, most likely. But anytime I talk to law firm owners and we're talking about growing, I always look at where our profit margin is first. Because if your profit margin's 8% or 9% or whatever, do you really want to go out and add $1 million worth of work, which is a lot more work, to only keep 80,000?
Yeah.
Or would you rather add $1 million and keep 200 or 250,000?
That's sobering to hear that, like $1 million and only keeping 80 grand. I mean, that's crazy. That's crazy to think about.
Yeah. And I mean, is it worth it? Right. And
Yeah.
so a lot of times, like, I meet law firm owners and they're like, I really want to grow. Right. And maybe almost double in size in some cases that I meet them. Right. Like, we want to go from 1.5 to 3 million. Right. And sometimes, like, I have to be a little bit of a bearer of bad news and just like, whoa, slow down a minute. Like, let's look at what we currently have and let's make sure we're efficient and where we should be first, because I'm also saving you a headache down the road, right? Not to mention, it takes money to grow, right? It takes additional capital to grow. So even if you're efficient today and you're at that 20 to 25%, as you go to add that next $1 million, maybe it's more marketing dollars, maybe it's more people, right? You are going to spend money. And if you're hiring more people, again, there's going to be a short period of inefficiency, right? They've got to get accustomed to the law firm culture that they're at, right? They've got to kind of ramp up their billing. So, you want to start out at that 20, 25%, so that if you take a hit and you drop down to 17 or 18, you're still okay. You're producing enough profits and enough cash to, keep the business running. It's not at peak efficiency, but you're also not in danger of running out of money, right? Versus if you start at 8 and you drop down and all of a sudden it's like, oh, we're at 2. Now we're at 1 because of some inefficiencies and investing more money. That's when things can get dangerous.
So you talked about the strategies. So what are some of the financial metrics or reports that a firm owner should review quarterly, annually, whatever, in order to like kind of gauge where they need to go?
So with all my clients, we're definitely meeting monthly to review their important numbers. Profit and loss statement is where it starts. The profit and loss statement is really kind of a scoreboard of how efficient is your business from an operations perspective, right? It's really the operations scoreboard, if you will, right? And again, I encourage everybody that's watching this, go pull the last P&L that you have, even if it's not updated. Maybe you have 2024s because you've done your taxes. That's fine. Go look at it. Take your net income, your net profits that's at the bottom, and divide it by your revenue, just to see what percentage that is, right? If your net profits are 200K and you did $1 million in revenue last year, obviously that'd be 20%, right? That percentage is really like your efficiency percentage, right? It's like how many dollars of the dollars that are coming in, how many of them are making it to the bottom line, right? So I think that that's a great place to start. And it's a great place to start looking for improvements, right? And then, the other thing to look at, and this is where it gets, really kind of into the accounting weeds, is definitely your balance sheet. So while your profit and loss tells you the operations of your company, the health of your company is really found on your balance sheet. And these are the kind of numbers that my clients and I look at on a regular basis monthly, because your balance sheet's going to tell you, well, what does the business own? Those are known as assets. So that would be like maybe you own a building, right? Or you own the bank account that goes with your business, right? And maybe that has 100K in it or 50K or whatever, right? What do you owe? So that's going to be called liabilities. But what do you owe? Maybe you own the building, but you have a loan on it, right? So that's going to be a liability that's going to have to be paid out on a monthly basis, right? Or maybe you have a working line of credit for some capital in case you need it, and maybe you got in a pinch and you used it, right? So what does the law firm owe is your liabilities. And then you get down to equity, and that really shows what money has been put into the business, what money has been distributed from the business to owners, and it's also going to track the lifetime profits of the business. So looking at those two statements on a regular basis, and I try to break that down as simple as possible. I know you get a lot of accounting terminology in there, but really understanding those and how can we improve those, super, super important. Obviously on your balance sheet, you're probably going to have your trust accounts, right? But there should also be a liability that goes with those, and they should match, right? So if you've got $50,000 in a trust account that's unearned, you're going to have a liability that's $50,000, because technically, if you closed your law firm today, that money would be owed back to clients, right? It's unearned. I mean, most likely, you're probably going to pass those cases on to another attorney and your trust balance is going to go with it. But if the clients wanted their money back, it's owed back to them.
Right. Yeah. That's not yours yet.
Yep. Exactly.
Yeah. We don't have any sponsors on this show, but are there any tools or software that you particularly like that you tend to recommend?
No, not in particular. Myself, for the clients that I'm working with, I mean, we build everything custom in Excel, dashboards and things like that for my clients to look at. I would recommend having a great accounting software that you use, ideally one that's in the cloud, so that you can work with your bookkeeper, even if they're remote. There's several options out there for that. QuickBooks Online is obviously the big gorilla in that marketplace. You have Xero, NetSuite. There's a few others, but definitely make sure you get a good one of those that, again, operates in the cloud and that you can stick with. And then the other software that's really, really big that law firms should have is a case management software. So this is going to really help you track productivity. It's also a great place for you to store your case files. And again, for that, there's a lot of softwares out there, but I just recommend get one. Find one that you like operationally that works well for you and your firm. You've got Clio, Practice Panther, CasePeer, MyCase, Zola Suite, which is now Carrot, I believe. I mean, there's a lot of different options out there, but I would just recommend go and find one that you're really comfortable with.
If any of you guys out there are listening for these companies, we can be bought. We'll just recommend you. We don't have to recommend them all. All right.
There you go.
I mean, truthfully though, to your point, I run my own business too. And when I figured out my project management software and my accounting software, when I got that dialed in, I don't want to be dramatic, but it was like life-changing, it totally took so much of the headaches away that it's definitely worth it to find that system, no matter what programs they are, put them together, your system that helps you be efficient.
For sure. And it's going to give you management control too, right? I mean, that's the biggest thing is, now while both of these softwares, whichever ones you use, they are going to be reporting on what happened, right? And it is going to be rearward looking, but it's still going to give you management control because you can see who's hitting their hours and who's not in your firm.
Yep.
Or if you're not billing hours in your flat rate, like who's cranking out flat rate cases and who's not, right? Which is also going to be a great platform for you to use when it comes bonus time, right? And you're going to have employees that come and ask you for bonuses and you're like, I don't really know. Should I give them a bonus? Should I not? Well, what do you look at? Well, let's look at their productivity.
Yeah.
Let's see what they've done, right?
Look at the data. Yeah.
Yep. And then obviously on the financial side, you're going to start getting financial reports, which is going to give you, again, management control on that side to look back and see what's happened, see what your results were, see how efficient your business was, and see what needs improved.
Yeah, definitely. Great tips, great advice as always. And thanks for listening to the Legal CFO with Ryan Kimler. If you're ready to get financial clarity for your law firm, you can visit netprofitcfo.com. And, don't forget to subscribe to our channel and like our videos. We love having you be here. We've got lots more great stuff coming your way. Ryan, always great to see you. Thanks so much for your time.
Absolutely. Thank you for having me, and looking forward to the next show.
Thanks for watching. Be sure to hit that like and subscribe button and leave us a review in the comments.